Today, we're going to be talking about peer-to-peer lending in Europe and Ireland. We'll be running through what is peer-to-peer lending, what are the pros and cons, what are the top platforms in Europe and Ireland, and what are the costs and taxes. On our channel, we talk a lot about investing in stocks, cryptos, ETFs, but we wanted to do this video to give an alternative option to some investors. As always with investing, make sure to do your due diligence and understand whether or not peer-to-peer lending should be part of your overall portfolio. We also have guides on how to invest in cryptos, ETFs, stocks, and I'll leave a link to the playlist here for you to check out. As always, if there's a particular section that you're interested in, you can use the timestamps below to jump to that section. At the end of this video, as I mentioned, we'll be running through the tax implications of peer-to-peer lending. This will primarily be looked at through an Irish lens, but some of the information may be helpful for European investors, so make sure to check that out as well. And as always, if you have any questions or comments, please let us know and we'll get back to you as soon as possible. Without further ado, let's get it. So, what is peer-to-peer lending? Peer-to-peer lending, or P2P lending, enables individuals or businesses to obtain loans from other individuals, usually mediated through a peer-to-peer marketplace. For example, rather than a bank lending an individual or a business money from several individuals is pooled together and used as a loan for this individual or business. The loans can be for many different things, such as individual consumer loans, agricultural loans, business loans, construction loans, a whole host of things. This is also known as social lending or crowd lending. Basically, it's like me or you lending to, say, Steve's mate, or to a business expanding in Ireland, or to a farm in Spain, albeit mediated through a peer-to-peer marketplace. There are usually 3 to 4 parties involved in the peer-to-peer marketplace. The first one is the borrower, which is one of the P's, and this is the person who needs the loan. The second is the lender, or the other P, and this is the person who loans the money to the borrower. The third is the peer-to-peer marketplace. Finally, there are the loan originators. The peer-to-peer marketplace is usually an online platform that matches the lenders with the borrowers. Ultimately, they provide their services online and can usually operate with lower overheads, thus providing a service more cheaply than traditional financial institutions. The role of the loan originator is to source borrowers for the peer-to-peer platform, and thus the peer-to-peer platform can just focus on acquiring lenders and the administrative side. Ultimately, they sell debt to peer-to-peer lenders through the peer-to-peer marketplace. It's important to note that with some platforms, both the peer-to-peer marketplace and the loan originator is the same platform or company. Platforms that facilitate peer-to-peer lending have significantly increased adoption since the mid-2000s as an alternative form of financing. So, why would someone loan or invest money on a peer-to-peer platform? The main benefit is that you receive interest payments from your loan. So this could range between 5 to 20% before tax, and is usually better than what you would get from a traditional savings account. However, the risk would be higher than a savings account, but more on the pros and cons later. So then why would someone get a loan from a peer-to-peer platform rather than a traditional bank? Well, number one, it may actually be quicker to get financed through a peer-to-peer platform. So for example, if you're a startup, you may not want to go through all the bank's administrative and bureaucratic requirements and would rather go through a quicker P2P platform. Number two, it may actually be easier to get financed this way. A lot of peer-to-peer borrowers have a lower credit score and thus can actually get credit on a peer-to-peer platform, whereas a bank would probably reject them. This obviously means that the loans might be more risky, but again, more on that later. Thirdly, it may actually be cheaper than banks. As previously mentioned, all these peer-to-peer platforms operate online, so they usually have less expenses and thus can provide loans at cheaper rates. But again, this would very much depend on the individual and the platform. So for the sake of this video, we're going to be looking at it from the point of view of an investor or a lender, as opposed to a borrower. So what are the pros of peer-to-peer lending for a lender? Firstly, it offers great diversification options across many facets. You can diversify the purpose of the loan originator, who gets the loan, the country of the loan, the industry of the loan, a whole host of things. Number two, it can be a very passive form of investing. Many platforms offer an auto invest function. And this basically means that, say for example, if you're invested in a loan and this loan is paid off by the borrower, they will then reinvest your funds into another loan within your set criteria. So basically, your money is always put to work. Number three, it can be quite low risk if you go with the right platform. Many platforms have a buyback guarantee, or else the loan is protected by an asset. Both of these basically protect the lender in case the borrower defaults. With the buyback guarantee, the loan originator will basically promise to buy back the loan in the case of a borrower defaulting or not paying back within a certain time. And with other platforms, they guarantee the asset as collateral against the loan. So for example, if the loan is used for a property, if the borrower defaults, the loan originator could then take claim of the property, sell it, and hopefully get your money back. And lastly, another cool pro is that you can invest in local projects and businesses in your area. A lot of these peer-to-peer loans are used to fund businesses in your area, buildings in your area, so it might be cool to get involved in something that's quite local to you. So, how about the cons? Well, number one is that your principal will not raise in value. Ultimately, you are giving a loan, so the benefit that you received is interest payments. Your overall fund may increase based on the interest payments, but the actual principal will not raise in value. This is somewhat different to stocks, ETFs, and cryptos, where the value of your principal can increase as well as decrease, but you could also get paid dividends or crypto staking rewards on top of that. Your stocks, cryptos, ETFs could increase by a larger percentage than the 5 to 20% range that you usually see in peer-to-peer lending. And yes, I'm talking about to the moon. Number two, there is a credit risk in you being paid back. Peer-to-peer lending does attract borrowers who, because of their history or credit record, are unable to get a loan from a traditional bank. Peer-to-peer platforms are a lot more flexible in offering these higher risk loans. However, they have to charge a higher interest rate to cover this risk. The higher the interest rate, the more difficult it is to pay back. As mentioned before, some platforms have this buyback guarantee, or else they protect the loan against an asset. However, this is not all platforms, so make sure you do your due diligence in understanding which platforms offer this protection and which don't. Your money would be safer in a savings account, but then you would probably have next to no returns. It's important to note that this will only protect you in the case of a borrower not being able to pay you back. But more on the risk with the P2P platforms and the loan originators in a second. Well, probably in a minute or two, I'm not 100% sure, but it'll be coming. Number three, the peer-to-peer landscape is not highly regulated at the moment, and this leads to risks with both the P2P platforms and the loan originators. Up until recently, peer-to-peer lending or crowdfunding has not been regulated in Europe. However, they've brought in new legislation as of November 2021, which is the time of recording. Many platforms based in the EU will have to adapt this EU legislation in order to continue trading. This should lead to less risk with the platforms in the EU. However, this could also lead to significantly less returns as the cost associated with implementing the legislation increases. We won't go into too much detail on this right now, however, we'll leave a link in the description which you can check out for yourself. Outside of the EU, and up until recently, this lack of regulation has led to some problems in the peer-to-peer landscape. Taking the platforms to start, some platforms have gone bankrupt. The notable examples are Quetzal and Investio, and this led to a lot of lenders losing a lot of money. Again, as with all investing, and as mentioned before, you have to do your own due diligence on what you're investing in, as well as the platforms that you are using. One thing you can do to ease your mind is to check the peer-to-peer platform and see if they have their financial statements listed on their website. By having a quick scan through these financial statements, you can check how many assets they have, whether they're profitable, and what their overall business looks like. You can also check where these peer-to-peer platforms are licensed and where they operate, and whether or not they'll be adhering to the EU legislation. And also, many loan originators have gone bankrupt too, Eurocent being the biggest example in 2018. Again, a lot of lenders lost a lot of money. It was not good. Many peer-to-peer platforms can't offer protection against a loan originator going bankrupt, or the platform itself going bankrupt. However, one thing you can do to minimize the risk is to diversify your peer-to-peer lending across multiple platforms and across multiple loan originators. Another con, and this might be quite specific to Irish investors, is the high tax that comes with peer-to-peer lending. In Ireland, peer-to-peer lending is classified as income. For people in the highest bracket, income tax can be up to 52%, and this compares to say 41% with ETF tax or 33% capital gains tax on stocks and cryptos. When checking on other European countries, we saw that some countries classify it as income tax and other companies classify it as capital gains tax. Finally, it may take longer to get your principal back on peer-to-peer lending than say with stocks or cryptos. If there are secondary marketplaces on the platforms, it may take between 24 and 72 hours to get your principal back. And a secondary marketplace is basically a marketplace for other lenders to buy the loan off you. However, with some platforms, there might be a charge if you sell your loan to another lender in the secondary marketplace, so that's just something to consider. And if there is no secondary marketplace, you may have to wait until your full loan is paid off before you can get your principal back. And depending on the length of the loan, this could be 1 day, a month, 3 years, 10 years. How long can you wait? So, what are the costs associated with peer-to-peer lending? Most peer-to-peer platforms don't have specific costs for actually using and investing on the platform. Rather, they incorporate this payment into the interest rate that you are offered. So for example, the interest rate that you are offered will already have a cut taken out of it. However, there may be charges for certain activities that you conduct on the platform. One of the main ones we've seen across multiple platforms is a charge for currency conversion. So for example, if the platform is in euros and you send in dollars, you'll get charged a fee to convert that money into euros. Another charge that some platforms have is for withdrawing your money early or selling on the secondary market, and this can be up to 2% in some instances. Some platforms may also charge you for depositing your money from the platform to your bank account. And finally, there can be inactivity fees if you don't use your money after a certain amount of time. It really depends on the peer-to-peer platform, so make sure you do your research on the platform before you sign up to understand the costs and fees. So, where do you go to invest in peer-to-peer lending? There are loads of platforms available in Ireland, UK, Europe, and around the world, and we won't be going into all of them, so don't worry. However, we do briefly want to go through some of the platforms that we have used right now. If you do want to sign up to any of these platforms, feel free to use our referral link in the description below. You obviously don't have to use these referral links, but it does help our channel to grow. And just a caveat, all the numbers are correct at the time of recording. The first platform is Mintos. Mintos was set up in Latvia in 2015 and is probably one of the most popular platforms in Europe. On Mintos, you can expect average returns of between 6 and 18%. And at the time of recording, the average interest rate was 9.98%. Mintos allows you to diversify your lending across multiple countries, loan types, and currencies. Mintos partners with loan originators worldwide to bring in their loans onto the platform. These loans will be pre-funded, meaning that the originators themselves have supplied the loan to the end customer and are now reselling part of that loan to investors via Mintos. There are 70 lending companies from 34 countries across 5 continents. Mintos has both an app as well as a web platform. As you can see here, the interface is very clean and easy to use. There are preset investment strategies, or you can customize your portfolio. The minimum investment for a single loan on the primary market is €10, so it's very easy to get started. You can add funds easily and safely through a bank transfer or by linking up your credit or debit card. Mintos has both an auto invest function as well as a buyback guarantee on a lot of their loans. Given that Mintos is one of the bigger platforms, it is quite liquid, and there's also a secondary market, meaning that if you need to get your funds back, you can do it a lot easier than some other platforms. One of the main risks for Mintos is that the loan originator goes out of business. As they say on their website, the lending company may become insolvent, become unable to service loans, or stop cooperating with Mintos. The second platform we're going to look at is Peerberry. Peerberry was also launched in Latvia, but in 2017, so it's slightly younger than Mintos. At the time of recording, they posted average returns of 11.05%. Peerberry focused more so on short-term loans. It has a very similar model to Mintos, although given that it is much younger, it actually has 10 times less the book value that Mintos does. It also has 10 times less users. However, we want to highlight Peerberry as it seems to be quite an up-and-coming peer-to-peer lending platform. Peerberry primarily focuses on Eastern Europe and Asia, and it does have less diversification options than Mintos. It has an auto invest function, a buyback guarantee, and the minimum amount that you can start investing from is €10. Peerberry has both an app as well as a web platform. The sign-up process is quite quick, and as you can see, it's got a very clean interface and is quite easy to use for a beginner. One thing to note is that there's no secondary market on Peerberry, so in the case of you wanting to liquidate your loans quite quickly, this might be more difficult. However, on the flip side, a lot of the loans are short-term, so you should get paid back quicker than longer-term loans in general. Next up, we have Estate Guru. Estate Guru was set up in Estonia in 2014 and focuses on property loans. At the time of recording, the average interest rate that they had on their website was 11.29%. One pro is that Estate Guru's loans are secured through a mortgage, and this is quite rare for peer-to-peer platforms that are focused on property. As they say on their website, we reduce this risk to our investors by conducting thorough due diligence and by taking asset security on every loan, in case the borrower is unable to repay their loan. Estate Guru does not guarantee your loans. So although they are secured through a mortgage, they cannot guarantee your loans, but it's an extra layer of protection for you. They have both an auto invest and a manual invest function. You can also choose the location of where you want to invest in properties. You can see here on their website that they have all the loans listed and the location, so you can basically choose the location of the property that your money is going to. As they say in their website, they have loans in Estonia, Latvia, Lithuania, Spain, Germany, Sweden, and Finland, with the UK, Ireland and Portugal to follow soon. One thing to note is that Estate Guru is not suitable for investors who are looking for short-term returns. If you sell your loan on the secondary market, you'll be charged a 2% fee for withdrawing early. And as with many property loans, they're long-term by nature, so be sure to understand how long the loan is before you commit to it. The staker also has some other fees and charges. Another annoying one is that you get charged a €1 service fee every time you withdraw money from your virtual account to your bank account. There's an inactivity fee if you don't use any money that you put into your account after 12 months. However, if your balance is zero, there's no fee. Another thing to note is that there's no app, it is web only. There are loads more peer-to-peer platforms. Even in our research, we came across plenty more, such as Spacer, Debitum Network, RoboCash, a whole host of others. Which ones have you heard of and which ones are you interested in? Let us know in the comments below. There are also some platforms in Ireland that we have come across. The first one is Linked Finance. This was set up in 2013 in Dublin. They focus on business loans and the minimum investment is €50. They don't have an average return listed, but they do say that you can earn anywhere between 6% to 17.5%. The second one is Flender, and this was set up in Dublin in 2015. This focuses on business and some construction loans. The average return is 9.5% at the time of recording. The minimum investment you can put in is €50, and they also have an auto flend function, which, as you can guess, is an auto invest function. The last one to highlight is Property Bridges. At the time of recording, they list an 8.26% average return. They focus on construction loans, and it's important to note that these are medium-term loans, so probably not suitable for short-term lenders, and also important to note that the minimum investment is €500. And so the part you've all been dreading, taxes. As I mentioned before, if you are not based in Ireland, you may want to do your own research onto how peer-to-peer lending is taxed in your country. Some countries have it treated as income tax and others have it treated as capital gains tax. We won't be going through all the countries in Europe, but what you can do is check how peer-to-peer lending is taxed in the country that you're taxed in, and then compare that to how stocks, cryptos and ETFs are taxed and see whether it's a pro or con. We have a brief guide which we'll link in the description, which gives you a high-level overview of how peer-to-peer lending is taxed in various European countries. However, as mentioned before, in Ireland, peer-to-peer lending is classified as income tax. So this means that you pay tax at your marginal tax rate as well as PRSI and USC. For people in the higher band of income tax, this is 52%. When you compare this to ETFs, which is taxed at 41% exit tax, or compare to gains on cryptos or stocks at 33% CGT, or compare it to 33% DIRT that you would have on interest and savings accounts, it is not quite as appealing. However, it is taxed at the same rate as dividends. One important thing to note is that if you lend on a peer-to-peer platform, you will have to file an income tax return at the end of the year. There are different ways of filing depending on whether you're a chargeable individual or not. If you have greater than €5,000 in non-PAYE income, you'll have to file a Form 11 as you are considered a chargeable individual. If you have greater than zero but less than €5,000 in non-PAYE income, you have to file a Form 12. We have videos on how to complete both of these, which you can check out here. So in conclusion, this is a relatively new way to earn money for a lot of investors. Peer-to-peer lending can be a great form of passive investing for a lot of users. However, your growth will be capped on the interest rate that the peer-to-peer platform offers. Stocks, cryptos and ETFs have a way better chance of increasing dramatically more than the interest rate offered on peer-to-peer platforms. However, they can also decrease significantly. You do get a more consistent return from peer-to-peer lending, however, there are also the risks. But also, when you look at stocks over the longer term, they have returned 10% on average. So when you're deciding where to put your money, you have to weigh up the pros and cons of all of these different options. Do you invest in peer-to-peer? What platforms are you using? And as always, if anything is unclear, let us know in the comments and we'll get back to you. Finally, if you enjoy this video, please drop us a like, and otherwise, we'll see you in the next one. And finally,